Hello, it's Aussie Dollarman here, and welcome to the Forex Form Guide, where we take a look at the major currency pairs through the lens of WD Gann analysis. If you're new to the channel, welcome. There's a playlist to get you started, and if you find value in this or any of my videos, I'd really appreciate a like, a comment, and a subscribe. It does help me to push the video, and more importantly, the works and the techniques and the story of WD Gann out to more people, especially to those people who may need it in their lives at this point in time. In this episode, as usual, we'll take a look at the Aussie dollar, the pound, the euro, and the US dollar against the Japanese yen. Before we do that though, a quick disclaimer: this video is for educational and informational purposes only and should not be considered as investment or trading advice. Bottom line there, do your own research, trade responsibly. We'll start by looking at the Aussie dollar, US dollar, and if you're new to the channel, I like to do that using this chart here from page 46 of Gann's book, The Wall Street Stock Selector, where Gann has his charts lined up side by side. He was always analyzing charts on multiple timeframes, not just one. Here's the Australian dollar monthly chart at the top, across to weekly and then down to daily and 4-hour chart. You can see the Aussie continues to push up from its April low. We started last week running down and having a new low on the weekly chart, but then the Aussie turned around, made a new high, and it's closed just above the 62.5% retracement point of this run down from September last year. And you can see that on the daily chart down here. We had a run up, pullback, and we've just started running up again. I don't like that as double tops any more than I liked these as double tops or these as double tops. It just doesn't look or feel like a double top at the moment. I just don't think it's quite ready to go down. If you've been following the channel for a while, you'll know I'm looking around 6 weeks from now for a nice, big, strong, tradable move to the downside on the Aussie. But for the time being, it certainly has been resisting any attempts to push the price down. It's been quite sideways for most of the 6.5 months we've seen go by this year already. Two areas of note that are going to prove potential points of no return would be this 75% milestone up here and this 50% milestone up here. So firstly, 66.85 or 66.85 US cents, and over here, 67.5 US cents. Should the Aussie be able to break above those, I would suggest it has significantly higher to go. However, until it can do that, I still think that we are going to see a lot more downside this year before any rally in this market. So with this weekly bar, we now have another higher swing chart bottom here on the Australian dollar. So the trend is still up on the weekly chart, and Gann says to trade with the trend until it ends. So I'd expect this market to go higher in the week ahead. However, that 75% milestone does loom large there. Around that 67 cent, there are a few levels that can stop the market there. Before we move on to the pound though, I just want to give you a quick swing trading lesson. So to do that, we're going to zoom into our daily chart over here, the 1-day chart, and the 4-hour chart over here. And this is really, really important in trading, and especially in Gann trading. We're told you've got to learn tunnel through the air, you've got to master Gann's time techniques, you've got to decode his cycles and his squares and put it all together. But for me, where I first started to make money is from this simple stuff with the form reading. It's not always easy, and I've got to be honest with you, these first 6 months on the Aussie dollar, that's about as hard as I've seen it for trading any market in the last 20 years. There's very few markets that I would say have been more difficult than the Aussie dollar has been this year. And I'm someone who's been trading this for a long time. I've made some good calls and some bad calls on it, but I made some really good money on the Aussie dollar over the years, but it has been a difficult year. So you need to be able to read the swing charts. So up here, we've got a nice swing chart top. Then as we run down, you've got a little down bar there, inside bar, down, down, down. So a swing chart is just going to go from this top all the way down here. We had a reversal bar here. See the market open, ran down. That was when the US bombed Iran over the weekend. And that's where the Monday opened up, a little gap down, dropped like a stone, and then rallied hard and closed the day near its high. Then we had up bar, inside bar, up bar, up bar, up bar, up bar. So your swing chart goes from the top there all the way to the low, and then all the way up to the high here. And you've got down bar, down bar, down bar, inside bars you ignore, and then a down bar as well. So what that's done there, that's given you a higher top over here and a higher bottom over here. And higher tops and higher bottoms mean that the trend is up. That's continued this week. We put in on Monday that higher bottom. We had an up bar there, so the swing chart turns up, and it has closed the week with a potential double top, but it's in an uptrend. Double tops tend to work best in a downtrend. So you've got lower top, lower bottom, lower top, lower bottom, lower top, lower bottom, and then a double top. So you've got a double top in the middle of a downtrend. Here, you're in the middle of an uptrend. This is on the daily chart, and the weekly trend is up as well. So looking for double tops is risky. You'd want to see a lot going for it before you were looking to trade that, and I just don't see that at these tops at the moment. But what I've shown you there, that's the swing chart on the daily time frame. Let's examine now this run down here, this pullback here from the top down to the bottom, which was Monday's swing low of last week. This is what it looks like over on the 4-hour chart here. See, you've got a little run down, a pullback, and then a swing down here. And then you've run up here and it's broken those tops there. That itself, that's what, 2, 4, 6, 8 bars. That's almost certainly, after such a long run up like this, that's almost certainly not enough for the whole daily swing to be over there. So in those cases, that tells you, yeah, lower top there, the daily top is in. That's this top over here. But it's not enough to say, oh, that's a daily low there and we're running up now. So when you see a pullback there, they can be opportunities for short trading. I'll leave that for you to decide based on your skill level and your experience, whether you would target something like this or something like this over here. But you're still, in my opinion, in almost all cases, you're still in that down move there. So you've got a run down there, pullback, another run down there, and a pullback. Then you've got your third leg down here, a strong sell-off there running down here. And then this is on a 4-hour chart, a pullback, and then a failed move down there. And that's what you're looking for. You're looking for a failed move down and or a higher bottom. In this case, it was a slightly lower bottom. We'll call it a double bottom there on the 4-hour chart. But that's the end of that daily swing down there. Now, I was watching this market for it to run down, but that's where you know it's almost certainly not going to happen on this swing and that this daily swing is over and we're turning around to go to the upside. Now, I thought there was a chance we'd get a lower top on the daily chart somewhere in here. That didn't happen. The market has pushed on, and that's going to happen to you in trading. You'll have those moments. As I said, it's been a hard year. I'm not making excuses for myself. I've seen some other markets. I think the pound and the euro have been a lot easier and clearer to call this year. Sadly for me, I'm married to the Australian dollar, so I have to live with that. But look, as a trader, you can jump in and out of markets whenever you like, but it has been a harder year. There's been trades there, but you've really got to know what you're doing and you'll be able to target those important tops and bottoms on the market. But that's a key area for you to study there. You can see the run up and the pullback there. Your opportunities for trading, your best opportunities for high reward to risk ratio trades are at these swing chart turning points. Study at this turning point up this top here. Study the smaller picture swing charts there. So you had a big run up from this low here, and then the market couldn't repeat that range there in 2 attempts. It had 2 cracks up. It couldn't repeat it with those 2 attempts up. Then when you break those smaller moves down, you can see this second attempt here. You got 1, 2, 3 sections up. Gann talks in How to Make Profits in Commodities and a few other places too about markets moving in 3 to 4 sections. Well, that's 3 sections up, and you've got a contracting range on the 4-hour chart into the top there. So that's probably the end of that daily swing, and it was. And then again, to the downside there, you've had a few moves. You've got to let a few moves unfold. As I said, don't get sucked into, oh, it's broken that top there after only a few bars down. That must be the end of the daily swing. You've got to give it a few moves down, almost always. And if you don't believe me, go back and open a chart like this and just go backwards piece by piece and look at every daily swing up and down and study the 4-hour chart in conjunction with that daily chart. And you'll see it over and over and over again. And now we're in a new daily swing up here. We've had a run up there, pullback, and an expanding range up there. I would suggest we're probably going to see a third, maybe a fourth leg up there, up to around that 67 cent area on the Aussie dollar. Now, as a trader, an aggressive trade, as you've got that downswing that's failed there and the market turns back up there, when your 4-hourly chart swings up there out of little double bottoms there, there's a potential area for entry for an aggressive trade. However, the market pulled up just short of a 50% retracement there. I thought it may hit that 50% and then go up there. I didn't take the long trade, but they're the sorts of things that you're looking for as a trader. You're looking to see, have we hit a pressure point, or has the trend changed on the chart, and are all the ducks lining up for this to be a turning point in the market? Now, if I haven't taken a trade out of all this, why am I showing you all these swings here? It's because this is the key that can really unlock profits for you in your trading. Again, we're told in this field, in the Gann field, tunnel through the air. You've got to master tunnel through the air. And that is true. What is in tunnel through the air will blow your mind when you see it in action. Every single level that I've gone up in tunnel through there, and I've been up quite a few. I'm not near the top yet, but I've been up a lot of levels. Every single level up, it's like a video game. It blows your mind and just think, wow, that is unbelievable. And the next one is even better. Wow, that's even better. But it takes time, and you've got to work through it. You've got to learn it. You've got to decode it. You've got to apply it to your market. I heard a story early in my Gann days where Gann was taking an overnight train somewhere. Maybe it was the Sunshine Special, who knows? But he was taking an overnight train. He couldn't get a sleeper carriage that he wanted, and someone recognized him and said, oh, you're Gann, come and stay with me in my carriage. And Gann was really grateful and apparently shared his market secrets with him over the night. Firstly, given what Gann charged for his course analysis, I highly doubt that he would just give that away to a stranger. Secondly, I don't think Gann could have explained all of his work to the point where the person would be able to replicate that work after just one night's lesson. It does take time to piece it all together. However, I believe he could have said something along the lines of markets have repeating cycles. Some of those cycles are to do with the planets. Some of those are to do with pure numbers, and they will give you a series of high and low points that will repeat over time in the market, and each of those price points can be worked out mathematically in advance using angles and squares in the market. So there you go. I've told you in 10 seconds. That's how Gann looks. However, hearing what that is and understanding what that is and knowing how to put every single little piece together over time, well, that's the hard part, and that's going to take you years to put together. Now, Tunnel Through the Air is an amazing book, and if you haven't read it or listened to it, I have put an audio book on the channel there so you can listen to that at your leisure. This is what I was told I needed to do when I started out, but what I wish I had been told is that I need to do something like this course here, which was Safety in the Markets Active Trader Program, which taught me swing trading, form reading, and price forecasting. Now, if you've been around the channel for a while, you're probably getting sick of me mentioning this. Personally, for me, when I started making money was from Safety in the Markets course, so I'll always plug them because that's where I got my swing trading and form reading and price forecasting background from. You've also heard me in other videos on this channel reference BA, who ran the Gann Trade 6 channel. I got a lot out of BA's work as well. It's funny, I was listening to one of BA's videos the other day. I can't remember which one it was, but he said someone needs to do an audio book of Tunnel Through the Air, and I thought, there you go. I did that 6 months ago. That's on the channel for you. Now, full disclosure, I was a student of Safety in the Market and I was a teacher of Safety in the Market, and the team at Safety in the Market are my friends. But I don't get paid anything for saying that. This is not some affiliate marketing thing or some pyramid scheme. That's just me giving advice for those of you who are on the Gann journey. If you're not making the money that you want to, that's probably your way into making the money, because I could give you all of the cycles that I know right now and show you how they work, but it would still take you months to get them working on your market. So in the meantime, if you need to trade to make money, you need something like that to have a swing trading plan to operate in the market profitably. Let's move on to the pound now. And the pound has actually sold off. This week, the Australian dollar looked like this early in the week, but the Australian dollar ran up and actually closed above last week's high. Well, the pound has closed on its low there. I spoke about this last week. I said we've run up quite strongly compared to the last monthly upswing there. I was targeting about 138.60 to 139 on the pound. That's fallen just a little bit short there of a number I've been watching for weeks and weeks on this market. But I said on the daily chart, which last week closed back here, so this little bar here is where we closed. I said based on the previous upswing there, price is a bit ahead of time, so it wouldn't surprise me if we came back below this trend line here, and we have done that. It's actually gone a little bit further below there than I thought, and we're sitting just above that 75% milestone. This could still recover and give you a run up to 138.60 or even 139 there. But if it breaks below 75, as I've said many times on this channel before, that's a bit of a point of no return. In my experience on the currency markets, when they break through something like a 75% milestone, they very rarely pull up on the 87.5. Once they go through 3/4 there, they tend to go through and break that base there. So I'd be watching this very closely on Monday to see if it can hang around on that 75% milestone. If it can't hold that level, well, obviously, I would say this weekly bottom is going to be broken. And once that weekly bottom is broken, this monthly swing up here, that's it for that monthly swing. It's done. Now, that doesn't mean that pound is going to drop like a stone. All it means is we're now in a monthly downswing. So what we would do, we would take our ranges resistance cards here, which again, you'll find in Gann's work. You'll also find in that Safety in the Market program I just mentioned. You run your ranges resistance card from that low up to the top there, and then you watch these levels as the market retraces against them, and then you watch your smaller swings and to see where they line up and see if you can pinpoint a higher bottom there. This could be a good place to target if we do get a higher monthly swing bottom here and it comes in on a nice price cluster, because you've got expanding ranges up here. And if you get a higher bottom, that confirms that the trend is up. And if you can get in quite close to the low there, well, look at this monthly swing. That's about 1,800 points. Can't remember exactly what it was, but that's a big move. And if you can get, let's say the next move is 1,700 points and you can get 1,200 or 1,500 points of that move, and you can compound a couple of times on the way up, that's how you can make a lot of money in trading just from one trade in the market, getting in with a small risk on your entry and then riding a bigger move in the market. And that's where that page 46 of Gann's Wall Street Stock Selector comes in, looking at your time frames side by side, looking for an entry on a small time frame where the bars that you're using to enter are smaller, and then riding that move on a larger time frame there, you can make high reward to risk ratios. But looking at the pound, I would say to me that looks like it's going down next week. I don't think that 138.60 is going to be hit. I could be wrong. but that looks like it is going down. As I said, that 75%, if it's going to hold, that's where I'd expect that low to come in, that level or very close to that level. But that to me looks like we're heading south next week. The euro, on the other hand, is a slightly different story. The euro has that same strong monthly upswing that we saw on the pound. You can see on the euro over here, that's all one weekly swing from this May low here, running up to the top there. At some point, I'd say this pullback is going to end and we will go up. I've been talking about that 119 level for several weeks now. You can see that in the previous episodes of the Forex Form Guide. One thing of note, though, is unlike the pound, if we look at this recent run up here, on the pound, we've retraced 75% of that, whereas on the euro, we haven't even retraced half of that move down on the daily chart. And if we do a little bit of time analysis here, 1, 2, 3, 4, 5, 6, 7, 8 trading days up, and then 1, 2, 3, 4, 5, 6, 7, 8 trading days down, that's pretty nicely balanced there in terms of time. Gann talks about balancing of time in his book, 45 Years in Wall Street. So that'll be interesting to see what happens this week. I like the 119 level. It doesn't mean it has to hit it now. We could have 2 or 3 weeks down, pull back and then run up and hit that level later. That's fine as well. I still think whenever we get to that level, it's going to be a potential pressure point for this market. But given that we're 8 days up and 8 days down and we're above a 50% retracement there, it wouldn't surprise me to see that go up. If I had to make a call, I'd say probably going up. But looking at this 2, 4, 6, 7 weeks up there, I would suggest 1 week down is probably not enough. And there probably will be a little bit more of a pullback. Just because it is 8 days up, 8 days down, doesn't mean the market must stop here. Gann would use words to the effect of if the market goes up from here or if it goes down from here. And I'd say the same here. If we go down on Monday, that'll be 9 days down. If we break below 50%, it's probably going to keep going a little bit further and we'll see more of a pullback here on the weekly chart. As a trader, when you see the end of a weekly move up there, it's always worth your while to go back and see, well, how could I have called that move? How could I have been aware of that and profited from that? But you do have double tops there on the 4-hour chart, and potentially there was a nice little double top trade that you could have taken there. Again, you could get into that double top trade there, and that's 1 4-hour bar there, bang. The market dropped about 100 points very, very quickly, just under 100 points very, very quickly. But then 2, 4, 6, 8, 9 4-hour bars later, that's 36 hours. That's a day and a half later. You're back all the way where you got in. So you could have traded these double tops, put your stop loss above the top, and then once it tanks down like that, you might have moved your stop loss to break even and then been taken out a day and a half later. Or you might have left your stop loss up there, and then as the market creeped up like that, you may have talked yourself into jumping out of the trade. So being right in the market doesn't always equal to being profitable, and being wrong doesn't always mean that you've had a loss either in the market. Looking at this daily chart here, as I said, 8 bars up, 8 bars down. If we look on the 4-hour chart over here, I can see 1, 2, 3, 4 sections down. We've had a little 4-hourly higher bottom there, a little bit of a higher bottom there as well. If we do start up on Monday, you've got a few higher bottoms there. Maybe we do have that run up into that 119 on the euro. It's just important to remember, as a trader, you need to have these timeframes set up and you need to track them as you go. And you need to understand swing trading. I cannot stress that enough. And Gann cannot stress that enough, because in most of his courses, he did have his swing charts in there fairly early on because he knew that traders needed them in order to make money. But if you're looking at the swing charts here, there's a higher bottom, and potentially you've got another higher bottom over here as well. So it'll be very interesting to see if we can put in another higher bottom on Monday morning. Maybe we are running up from there. The euro and the pound have been pretty close together this year as well. So if the euro goes up, pretty good chance that the pound will go up as well. We'll finish with a quick look at the US dollar, Japanese yen. And surprise, surprise, we're about our 3rd month, maybe our 4th month in a row where I'm saying the exact same thing. So I'm not going to bore you with the details. Basically, triple bottoms here. I think that they are going to be broken. That's if we head down now. If we head up, I still think this trend line from the tops there will hold the market, and then the market will eventually turn around and crack through those lows there. Like the Aussie dollar, it's been messy and sideways through here. Alan, if you're watching, Alan's a friend of mine, was just telling me that he's been looking at the yen this year because it's been making better ranges than the Australian dollar. Don't know about that through here. It's I know it's 400 points there from the 142 up to the 146, but that's still a very choppy sideways market as well. It's been a bit painful this year on the currency markets a lot of the time. But as I've been saying most of the year, I think things in the last third of the year are going to really pick up. The daily chart here on the yen, gee, that's just awful. That looks like an intraday chart. You look at an intraday chart at a quiet part of the market and you think, oh, gee, not much is going on there. That must be those 3 hours or 4 hours where everyone's asleep and no one's really following the market. But that's a daily chart on the US dollar yen. And it's just been messy all the way through. choppy, 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 choppy. But sideways doesn't last forever. That's all for this week's episode of the Forex Form Guide. A quick reminder, if you haven't started listening to or reading The Tunnel Through the Air, I'd encourage you to do so. It is a long-term project. If you are walking the Gann path, you are going to need to tackle this book at some stage. Get into the audio book there. Just listen to a chapter a day or a chapter a week even, and work your way through there slowly, listening out for the repetition and the keywords. And when Gann wants to make a point, he'll often make it through repetition, and he'll do it over and over and over again, and you'll see it. For example, in the foreword, he's mentioning the number 3 over and over and over again. Later on, he mentions birthdays. Remember your birthday, Robert? Yes, your birthday. Something always seems to happen around your birthday. Your birthdays are very momentous, and he'll drive it home through repetition. And I found when I was recording this, I was noticing things as I was reading it out loud. I was thinking, oh, gee, he's just said that 5 times, and the penny starts to drop there. But you only get those penny drop moments when you've done the repetition, when you've done the work there. So have a listen to it, and over time, you'll start to pick out the things that Gann is trying to direct your attention to. Also, if you did find value in the video, just again, that small humble request, if you could find it within your heart to click on the like button, I'd really appreciate it. A comment and a subscribe is also very, very welcome as well. That's all for this week's episode of the Forex Form Guide. Again, I hope that you enjoyed it. If you do have any questions, comments, or queries, let me know in the comments below. Otherwise, until next time, have a lovely week. All the best with your trading, and bye for now. Yeah, I can hold him. Yeah, no worries. Just let me turn this off. Let's start at the very beginning. It's a very good place to start. When you read, you begin with A, B, C. With L-O-V, you begin with Do, Re, Mi. Do, Re, Mi. Oh, still on. Oops.